Hi, I'm Mark, and today we're going to talk about decentralized exchanges and what they are, what they're not, and basically the differences, the pros and cons. A decentralized exchange is a cryptocurrency exchange that doesn't rely on a central source. Basically, it's a transaction that happens peer to peer. So different people will go and place orders, buy and sell, and you have a way to see those individual orders and get it directly. So we're going to talk about what the differences are between main exchanges like Binance and GDAX, and the difference between what a decentralized exchange will look like. So let's go ahead and hop into it. Uh, Number one is availability. So a decentralized exchange, you basically have it's not controlled by a single entity, so there's really no single point of failure. Whereas on a centralized exchange, you can have service interruptions for many things. Downtime because of maybe a server is down, maybe because the entire organization is down or has a problem, and so there's a lot of single point of failures that can happen. But decentralized exchange, things are scattered across different nodes, so there's no one single point. Second is security and control. So with a decentralized exchange, you have full control over things like user accounts, balance, logins, your wallet, your private key. Whereas on a centralized exchange, so if you go, for example, and sign up on Coinbase or GDAX or Binance or Bitfinex, you basically, they control your account. They control your private keys. So they're owned. So again, if something happens, then you could potentially lose that. Uh, with a decentralized exchange, in terms of trust, there is no middleman. So you're dealing directly with a buyer or seller. Whereas with a centralized exchange, they control your funds because, like I said, they control your wallet, and all transactions essentially go through it as a middleman. So this has implications for, anytime there's a middleman in there, there's always a risk. Maybe there's bad actors that may impact your trades. So taking the middleman out of the situation can be a good thing, and in this case, I definitely think it is. Number four, privacy. So with a decentralized exchange, there's ability to transact without ID or having a know your customer or a KYC requirement. Whereas centralized exchanges, you may know that if you ever try to sign up, you're going to be asked for a lot of information, particularly the more that you're trading. So things like they're asking for your ID, a copy of that, your name, your address, sometimes your social security number, and if you're big on privacy, then you may want to consider something like a decentralized exchange that doesn't go into that level of detail, depending on which one you go with. There are a few that have almost zero requirements in terms of ID. Ones like BISC, for example, formerly BitSquare, and it's essentially a peer-to-peer app that runs on the Tor network. So very private and anonymous. Getting into anonymity is number five. So basically, with a decentralized exchange, it's harder for a government to trace your funds for purposes of taxation. Whereas a centralized exchange, your transactions can be scrutinized and can be tracked directly back to you. So, for example, you guys may remember, so last year, Coinbase was hit with and was requested by the Internal Revenue Service to hand over information on all accounts that traded or sold or had more than 20,000 US dollars worth of cryptocurrency. I believe that was from 2013 to 2015. So by law, you're required to pay capital gains taxes on cryptocurrency. So by Coinbase handing over your information, the IRS they're now actually in investigation for all of those folks that fit into that criteria. With a decentralized exchange, more than likely that wouldn't be a concern because you're not giving over private information. You're essentially being able to trade anonymously through the power of your wallet. So your wallet is essentially your authentication. So if you use wallets like Trezor, or if you use like a software-based wallet in your browser like MetaMask, then that's essentially your authentication. No need to give up any other private information. Number 6 is fees. So things are changing a bit more. That's why I have a asterisk by the centralized. So with decentralized, you pay no or low or no fee per transaction. With the centralized, it's essentially their core business to charge you fees. So Binance, for example, charges fees. All the major exchanges charge fees. So, but that's changing. You have some exchanges that are willing to not charge you fees, and they have other revenue models. Like, for example, Robinhood. It's a centralized exchange trading in cryptocurrency, but what it does is it allows transactions free of charge. And the way they make their money is they charge for other services. I believe things like margin trades or listing ICOs, essentially, or underwriting ICO. So it's interesting how you can now have these new exchange models and not have to charge fees because you have other interesting sources of revenue. Number 7, regulation. So with a decentralized, as I mentioned, it's harder to seize or freeze funds in the event of government regulation, whereas with the centralized, your funds can be frozen and confiscated. Because again, the main takeaway from this entire presentation is that with a decentralized exchange, the power is in your hands essentially. You still control your wallet. You control your private keys. It's the same reason why if you ever bought an ICO, for instance, and they say, oh, well, you can send us your ETH to purchase some tokens for the ICO. And they all say, don't send your money from an exchange. Send it from your private wallet. Why is that? Well, because with a private wallet, you own the keys. And with exchange, you don't own those keys. So it's a lot easier to transact directly with you and to fund you through your personal wallet. So that's just one thing to keep in mind. Number 8 is personal security. So with a decentralized exchange, there's no need to maintain personal security over your wallet or devices. You need to maintain this with a decentralized exchange, whereas a centralized exchange, you don't have to worry about that. So this kind of gets into more of a pro for the centralized exchange, of course, because it's a bread and butter to constantly scan wallets, and they have bank level security, and most of the better ones actually have it in cold storage, meaning that it's really hard for a hacker to get to it. It's not totally unsafe to have it with a decentralized exchange and for you to own your wallets, because think about the attack vector, right? There's professional hackers that are coming after money, more than likely they're going to go after these honeypots with like millions of dollars or Bitcoin or Ethereum in the wallet versus just a few $100 or a few thousand that may be in a personal wallet. So while you can get hacked, it's more likely that a professional hacker is going to go after the bigger pot. Number 9 is customer support. So on a decentralized platform, there's really no central support or official support for services. So if you have any issues or complaints, that can be a problem. Whereas centralized exchange, they typically have a phone or email or even chat support in some cases. I have an asterisk by the decentralized exchange because that's also changing too. And you have some centralized exchanges that are using more of a community-based approach. and but there's only so much you can trust the community when you're talking about support. So more than likely, if you're dealing with your tokens, you want someone that's actually trusted. So in this case, there are some that provide a different model. I'll use BISC for example because I think they're pretty cutting edge. What they do is they have an arbiter model. So basically, they provide tokens for people that actually will, if you have a problem with your transaction, you can escalate it to them and they decide whether or not it's legit or not through sort of like an arbitration process. Number 10 is liquidity. So with a decentralized model, that's one of the major shortcomings. It's not as liquid, so it's lower amounts of volumes, and at the end of the day, if you don't have liquidity, then any major trade can significantly impact the price of the entire exchange. So, for example, if you're trading 1,000 Ripple on a smaller decentralized exchange, then that could essentially if there's not enough volume on there, then you may not even see a trade. You may not find a buyer for hours or even days. It's still a problem on centralized exchanges. If you don't have a lot of volume on a centralized exchange, then that kind of if you don't have that liquidity, then that affects the order books. So that means any small change, if someone makes a large purchase, then that could potentially impact the pricing and on the tokens on that exchange. 11 is speed. So for decentralized, transactions are typically slower, between 100 to 10,000 transactions per second, whereas on a centralized exchange is a lot faster, typically greater than 1 million transactions per second. Again, this is changing because you have some newer players in the decentralized worlds like Stellar and Bancor that they take that problem away because they have interesting technology like atomic swaps, or they have smart tokens in Bancor's case, where essentially every token that's on the platform that you trade has currency is backed by something real. So like essentially it's backed by Ethereum. So when you do a trade, then you automatically have that swap, and you have that you're able to do that trade instantly. And then there's the advanced features. So for example, decentralized exchanges, you typically have like basic buying and selling. You're not going to have the fancy features of a centralized exchange like margin trading, margin lending, stop losses, bot trading, or any of those algorithmic kind of things. Some of the more sophisticated platforms these days connect to a library called CCTX. And if you're integrated in them, you can do advanced features like algorithmic trading, bot trading. So a lot of these decentralized exchanges just don't have that functionality just yet. So just looking at it in a nutshell, here's just sort of a quick overview on decentralized versus centralized exchanges. And as you can see, there are a lot of pros and cons on both sides, and I believe these are going to change over the next few months, over the next couple of years. And all in all, decentralized exchanges I believe, are going to be the future because, number one, they give you more control over your funds. So if anything happens, you're still in control of your funds versus an exchange. If it's hacked or if it comes under, a raid by the SEC or the IRS or FBI, then, those assets can be immediately frozen, and then you may not even see that your funds again. Number two is just there are the fees where fees are just going to be low or even non-existent with decentralized exchanges because you're dealing directly with someone else. And three, I think it's just a new paradigm. With the centralized exchange, you have the ability to just have a more reliable source of ways to transact